Welcome to Nasdaq Trade Talks. I'm your host, Jill Malandrino, global markets reporter at Nasdaq. Joining me at the market site in Times Square, we have Michael Sokoll. He is a senior managing director on Nasdaq's market intelligence desk, and we have an update for you following the Fed's decision to cut Fed fund rates by another 25 basis points. Mike, it's great to have you with me as always for the instant reaction, and kind of really hasn't been a reaction. If we take a look at the major averages right now, they're digesting this news pretty well. Yeah, so the Fed cut as expected. I think going into today was a 99 and something % chance that they would based on what the market thought. And so that doesn't surprise anybody. You look for the statement, and the statement seems to suggest that they might take a harder look at future rate cuts. So you could argue maybe stocks would have sold off on that, but they didn't. So I think it's right in line with market expectations. Keeping in mind, though, that last time the Fed had an announcement, it wasn't the actual announcement. It was when Jerome Powell started speaking half hour later. So we'll have to see. I don't know if we're done with all the drama, but for now, pretty calm reaction. Yeah, I think we got a couple of tweets out of that as well, which helped to move the market. But let's take a look at our chart that we have for today. And this is the odds of potential rate cuts moving even out a bit further. Yeah, I think we want to focus just on the blue line. That was up until this morning the percentage chance of an October cut. Now it's 100%. But what's interesting to me is how that number moves around. So in green is the S&P 500, and that's the index there. You'll notice that during parts of the year, and as recently as the beginning of August, and then again in September, it was only a 40% chance of a rate cut. And then since then, it has spiked up to in the high 90s lately. So the point is that number, even those odds, that's based on the Fed fund futures and the market implied probability, that means that it's in reaction to a lot of different data points. And so when you get negative results in the economy, those percentage odds spike up because people expect a Fed rate hike. So it's just interesting to keep those in mind, because now if you look at the orange line, that's the second cut in December. And those, just about the same time that the October rate cut odds spiked, December went down. So I think the market was already saying we only expect one more rate hike to make it the third for the year, and then the Fed will assess. So those numbers right there sort of say that what was announced today is not a surprise to the market. We'll probably not get a cut in December, and then the market, the Fed will be data dependent, and we'll see what happens going into next year. All right, now to wrap up for today, we have Facebook and Apple after the bell, big heavyweights in the Nasdaq 100. Yeah. Earnings season starting to wind down. We have the consumer names next week, which will be a really good tell into what happened with our GDP number today, what's going to happen with our September jobs number or October jobs number on Friday. Yeah. So consumers really where the positivity has been in this market, because once that's over, we're back to macro for the remainder of the year. Yeah, and earnings season, just a word on that, was supposed to be about a 4% decline in earnings. Now, normally companies beat, so that's on about a 3% number. So you're looking at a negative 1% in earnings. What's come in so far has been a little better than expected. So we might very well end up right around 0.4% negative earnings, which is about the same as first and second quarter. So the market's at record highs. So even though you have flat earnings, I think they're looking through that to things like the rate cuts. And it's not so much earnings driving it, because we've done a little better on the expectations than had been thought. And we'll see what the guidance is. I think will be the key for the next couple of quarters. All right, thanks so much, Mike, for joining me as always. And thanks for joining me on Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq.